welcome to Business Television India. You are watching Closing Bets. I'm Nifty Ganguly, and it's turning out to be quite a strong start to the week. In fact, we're extending gains that we had started building on Friday. At the moment, bulls are in control. It's a 100-point jump that's playing out as far as the Nifty is concerned. Sensex 2 up over 300 points as we speak. Both those indices seeing gains of about 0.8% at the moment. The Bank Nifty is leading the way once again. So it's nearly 1.5% jump that's playing out on the Bank Nifty, and we're about 100 points near those record highs that we'd made on that index. Which sectors are doing well? Then nearly all sectors trading in the green. Metals are leading the way. PSU banks not doing too badly, and of course realty stocks doing fairly well. These indices seeing gains of anywhere between 1.5% to 2.5% at the moment. Definitely seeing strong action on the street at the moment. But let's talk about where we're seeing the selling pressure then, and it's clearly the pharma space that is in pain. In fact, if we pull up the individual counters that are seeing pressure at the moment, names like Divi's Lab, Lupin under pressure, Aurobindo Pharma seeing cuts. Dr. Reddy's also coming under fair bit of pressure as we speak. Piramal Enterprises also losing out. Sun Pharma also seeing cuts of about 0.3%. Remember, Sun Pharma reports numbers this week as well. Keep these stocks on your radar as we go forward from here. Also under pressure is heavyweight Maruti, and this is an exclusive story that we brought you earlier in the day. In fact, a bit of a BTVi impact that's playing out as far as Maruti is concerned. We told you that Maruti is resorting to production costs to reduce the kind of high inventory at the moment. In fact, they've clearly run out of space. Very, very high inventory levels. In fact, record high inventory levels coming in for Maruti, and on the back of that, production cuts is what we are seeing. The stock, though, did see a bit of pressure at the moment, bouncing back, gains of about 0.5% playing out on Maruti. It is all about earnings, though, as they keep rolling in. In fact, earnings coming in thick and fast, and we're seeing a fair number of stocks reacting very, very positively to those numbers. A lot of mid and small cap stocks on this list. Look at an IGL. It's a near 6% jump that's coming in for that one. BHEL reported numbers a short while ago. Fairly good numbers, beat expectations. 2.5% gains is what we're seeing for this one. Ruchira Papers doing well. GAIL along with IGL also on the move. We did see a 1:1 bonus also announced by GAIL. That said, the Petrochem looking fairly weak on that count. Keep these stocks on your radar. We're seeing strong reactions play out across the board. But on the flip side, pull up Page Industries. This company reported numbers. Clearly a weak show coming in from Page. Profits came in lower by about 20%, and see the cuts that are playing out as far as Page Industries is concerned. 11.5% cuts coming in for the counter. It wasn't just the bottom line that saw pain. Margins also saw a fair bit of contraction as far as the fourth quarter is concerned. Manpasand Beverages, pull that one up. Another counter to keep on your radar. Some bad news coming in for this one. The CFO as well as MD have been arrested by the CGST Commissioner. This on allegations of GST fraud. So this counter seeing 20% cuts. In fact, lower circuit coming in as far as Manpasand Beverage is concerned. But apart from these stocks that we've spoken about, the action on the street is clearly positive. Bulls are in control. We're taking that post-election result euphoria and running with it, heading back towards those life high levels that we made last week. In fact, let's welcome in then Amit Shah of Indiabulls Ventures. Amit, a very good afternoon to you, and good to have you on. Clearly seeing positive action as we kick off expiry week. We've had a whole, a host of cues for the market to digest. Earnings are still coming in, and that's something that's continuing to play out as far as stock-specific action goes. But on the index, it's very clearly a positive move that we're seeing this afternoon. What do you make of, market action at the moment, and where do you see the expiry coming in?
Sure. So yeah, I mean, see, the undertone for the markets continues to remain on the positive side. Even if just ahead of the elections, if we see, markets did go very, very confidently. People were talking about a very, very big event, but somehow markets were confident probably of the outcome. Even in March, the kind of flows that we saw for a particular month, those were the kind of flows we have not seen in a decade. So markets were confident anyway. And I think it's just the continuation of the already bullish trend which we already had even before the outcome of the election results. My sense is some of the positive as far as index is concerned is to a bit extent priced in. Still the undertone would remain positive. So my sense is we would continue to be in a range between 11,700, 600 on the downside, and 12,200 kind of levels on the upside, and the undertone would continue to remain positive. Broadly, we are already seeing the mid cap and the small cap theme coming back. And I do see this theme playing out in a bigger way. I don't think it's just a trading pop or some just a small relief rally. I think this is going to get bigger.
All right. So, in fact, the big theme clearly is the mid and the small cap space. This is where we've not really seen that recovery play out. In fact, even fundamental analysts, Amit, at the moment are betting big on this space following the kind of election result that we have had. What is the call on the bank Nifty though? Because, you know, this is where we're up about 400 points at the moment. We're within touching distance, just about 100 odd points away from life highs once again on the bank Nifty. Do you feel that we, can expect to make fresh life highs this week or at least in the next couple of weeks once again on the bank Nifty?
Yeah, so see, broadly the momentum continues on the upside, and bank Nifty has been actually the pillar of the rally. In fact, the pre-election rally that we have seen, bank Nifty has significantly outperformed the benchmark indices, and it continues to do so. This sector is attracting a lot of money. This is probably the sector which will continue to outperform, and this is where big money are interested in. So I think broadly the undertone will continue to remain bullish. In the near term, I think the upside may be a bit capped somewhere around 32,500, 33,000 could be some sort of a area where Nifty may find it a bit fatigue there, but broadly undertone continues to be extremely positive on the bank Nifty.
All right. Clearly, we're looking at leadership coming in from the bank Nifty, and that's possibly something that can continue going forward from here. Like Amit's pointing out, this was really the one that kept the index afloat even in the pre-election run that we saw. A few breaking stocks for you, and largely this is from the broader end of the market, like we were discussing. Pull up a Camlin Fine Sciences, seeing a very smart move come in on this one. It's a near 20% up move that's playing out for Camlin as we speak. Birla Corp is another one to keep on your radar. Another breaking stock for you there on the screen. It's a 5.5% jump playing out on Birla Corp. So Camlin and Birla definitely two stocks to keep on your radar. Sharda Motors, another breaking stock for you at this hour. It's a 5% jump playing out on Sharda Motors. And Ashoka Buildcon, definitely infra has been a theme that we've been discussing. It's an 11.5 near 12% jump playing out on Ashoka Buildcon. From the retail space, pull up V2 Retail, another breaking stock to keep on your radar as well. 11% jump coming in for this one. Camlin, Birla Corp, Sharda Motors, Ashoka Buildcon, V2 Retail. A few breaking stocks for you. Of course, this is the last hour of trade and we do see this kind of action. But Amit, any of these catching your eye on the charts?
Yeah, in fact, a lot of them, because as we just spoke, the undertone, the broader money is now coming in, and there are a lot of stocks actually which are showing good healthy signs. Individual stories as a sector. Now, if you speak about Ashoka, that is also showing good momentum on the upside. Camlin Fine, the one that you were saying, is probably now getting out of its long consolidation, and once it sustains and another up move, probably above 56, I think this can go towards 75 or even 80 on the upside. So I think the build-up is happening, and this sector has not done a lot since last 1.5 years, and now I think we are going to see very, very quick and fast up moves coming for a lot of stocks.
Absolutely. Just one of the kind of stocks to keep on your radar as far as the mid-cap space is concerned. In fact, Amit, it's 2:40. Let's get a few trading ideas from you then. What else are you lacking at this hour?
Sorry, was it for me?
Yes, that's to you. Any stocks catching your eye? What would be on your list as far as trading ideas go?
Yeah, so sure, yeah. So RCF is something which I recommend going long on. Keep a stop of 58, and RCF can see a quick target towards 75 over next probably next few sessions. So RCF is something I like. L&T is a lot of large caps are also breaking out. L&T is amongst one of them, and L&T can see a target of 1700 as far as trading is concerned, though beyond that I do see a much higher target, but from a trading perspective I do see L&T for a 1700 target with a stop of 1524 on the L&T. Cummins I recommend buying with a stop of 758 with a target of 825.
All right, so that's Cummins India, L&T as well as RCF. In fact, that's exactly, the kind of action that we're seeing. Amit, it's not just the mid and the small caps. Those indices up about 1.5% as we speak. Trading, in fact, in line with the kind of gains that we're seeing for many of these frontline names. So L&T was one that you pointed out. It's definitely a heavyweight. It's a 3% jump. And if you pull up a longer term chart, the last 5 days or so on L&T, it really gives you an idea of the kind of sustained buying traction that we have been seeing for L&T. We're up 17% in the last 5 sessions alone on Larsen and Toubro. Along with that, we've been seeing good buying action for a whole host of the financials. So pull up State Bank of India. It's 1.5% up on SBI. In fact, we're trading above 360 levels as we speak, and that's another big contributor to the Bank Nifty also. In terms of large cap action, Amit, what would be on your list?
In fact, you just named it. I was just coming to SBI. I think SBI is setting up for a big move, and I'm not talking. Of course, you can always trade for small gains, but I think now it becomes a portfolio investment. I see SBI doing very well over the next 2 to 3 years. I would not be surprised if SBI is a doubler from here, but I mean, even in the near term, SBI is headed much higher. See, it's breaking out. It's probably one of the strongest stocks in the PSU banks. Anyway, financials, banking has been outperforming. So this would be my pick, even not just from a trading perspective, but actually people can make good money even investing at these levels over the next maybe 2 years. I think I do see this stock even doubling from here.
All right, so don't rule out SBI even doubling from here. That's a very bullish call coming in from Amit, State Bank of India. It's been doing well. Pull up a longer term chart, the last 5 days or so, you can get a greater sense of the way SBI has really pulled the market up, pulled the financial space up. It's a 13% jump that we've seen play out. In fact, the monthly chart as well will give you a sense of where SBI has moved from below those 300 levels, where it was hovering for quite a while. It's managed to break out of that in the last month. It's a 16.5% jump coming in for a State Bank of India. Definitely keep that one on your radar. And in fact, as we're speaking, some lines coming in from Finance Ministry official to Newsrise saying that they may recapitalize PSU banks in fiscal 20 to support loan growth if needed. Remember, this is a story that we brought you as well in terms of recapitalization for the PSU banking sector. Also going on to address the kind of liquidity crunch that we're seeing in the NBFC sector. He's saying that the liquidity crunch is limited to the NBFC sector and no government intervention is needed as of now. Remember, the RBI too has put out a draft circular on the kind of liquidity management that NBFCs need to undertake going forward from here. They've said that the RBI is taking sufficient steps to address the liquidity situation. No need for the government to step in as far as NBFCs go, but for PSU banks, definitely open to recapitalization in the current financial year. Let's take a quick break. We'll come back, talk about the kind of action that we're seeing at the moment. In fact, we're trading near about the highs of the day as far as the Nifty goes. Bank Nifty 2 gains of nearly 400 points coming in at the moment. We'll get a few more trading ideas from Amit as well at 3 o'clock. Stay tuned. We'll be right back. Welcome back. You're watching Closing Bets. It's a strong day coming in for the market, trading above 11,900 on the Nifty. It's a jump of about 0.7% as far as the index is concerned, adding about 80 points as we speak. Bank Nifty 2 holding out above that 31,600 mark, seeing a fairly strong move coming in across sectors. But the one that's really leading the way is the metal space. In fact, top gainer on the Nifty at the moment is the likes of Tata Steel. It's a near 6% jump that's coming in on Tata Steel, and this is really a move that started late on Friday after we had news of Theresa May stepping down as the UK Prime Minister. Of course, 7th June is when she'll officially step down, but has announced her resignation as far as the Prime Minister of the UK goes. The implications as far as what this means for Brexit definitely do play into this, but metals across the board are having a strong day. In fact, Amit, what's the call on Tata Steel at the moment? We're trading above 510 levels on that counter. It's the top Nifty gainer, and along with that, it's not just Tata Steel. NMDC is doing well. JSPL, JSW Steel from the mid-cap space. Steel Authority of India also on the move. The aluminium players, Vedanta, Hindalco, Nalco, all seeing fairly strong traction as we speak. What are you liking from this space, if at all?
Yeah, so see, if I talk about metal space, one of the best picks that personally I like from a long-term perspective is Tata Steel. But however, in the near term, it is in a weak trend, so it needs to do a lot before it setups, the momentum catches up on a sustained basis. As of now, it can, from a trading perspective, show move towards 530 on the upside. But overall, it needs to breach above 560, 65 on a sustained basis for a bigger trend to change and for the momentum to catch up on the upside big time.
All right. So,
but yes,
right.
metal space are seeing, yeah.
All right, Amit, I'll let you continue your point. Anything else you're liking from the metal pack?
Yeah. So yeah, I mean, as I said, metals are having these whipsaw moves, which are not continuing. You see down moves coming in again, then based on some news, again up moves. I think as of now, it needs to settle, and it's not really in that trading zone. It doesn't have that strength for the short-term trading, which you need basically.
All right, point taken. So it's looking like, we're not really seeing that kind of strength sustain as far as metals go. Today, it's a very strong move, but it has been very, very choppy and very volatile as far as the entire metal sector is concerned. Tata Steel, though, looks like one of the preferred picks in this space, but we do need to see some more strength in those charts for more conviction on that one. It's a near 6% jump coming in today's trading session at any rate, seeing a good move across the metal space. But the action really remains with financials, and we can't look away from this spot. We spoke about State Bank of India. Axis Bank making fresh life highs in trade at the moment. 2.5% jump coming in on Axis Bank. In fact, if you pull up that counter, you get a sense of the kind of up move that we've seen in just the last few minutes on this one. Trading above 810 levels on Axis as we speak. In fact, a slightly longer term chart, the last month or so, will give you an idea of the kind of strength that has been building steadily in the likes of Axis Bank. In the last month, we're seeing a gain of about 6%, but like you can see, it's been the last couple of weeks where most of the traction has been coming in as far as Axis goes. ICICI Bank has also been doing fairly well. In fact, Amit, let me just get a call from you. Axis, life highs coming in for this one. It's showing no signs really of slowing down. What would you be doing with this one? And along with that, anything else you're liking as far as these larger private banks go?
Yes. In fact, Axis Bank, I even correctly remember quite long back, I had a very bullish view on your channel itself. That time I think it was trading about 600 and had a target of 850. I think that 850 is very much on the cards now. But I think even beyond that, see, Axis has been catching up. Axis Bank had actually kind of underperformed for last 3 years, while the bank Nifty index and a lot of several other stocks within the banking space had done fantastically well. So Axis Bank has gone through its own cycle of consolidation and had moved beyond that. So a big move was always on the card. Something similar setup as we just spoke, is happening in SBI. So one can expect a big move there. Axis, of course, continues to remain strong and is in momentum, and in the very, very near term, one can expect a target of 850.
All right, so maintaining that 850 target that Amit had come out with even when Axis was trading at about 600 levels. At the moment, of course, we're just about 40 points short of that. Axis definitely having a good day once again in trade. It's up nearly 50% in the last year as far as Axis Bank is concerned. Seeing a good move on Axis Bank. It's keeping the Bank Nifty afloat as well. Seeing fairly strong traction across PSU as well as private banks. What about an RBL bank? And in fact, 3 names for you, Amit, from the mid-cap private banking space. One is RBL, which has definitely been seeing good traction when near 700 levels now as far as RBL Bank is concerned. It's the top Bank Nifty gainer too. It's a 4% jump. DCB Bank, just to add to that, and what would you be doing with Federal Bank?
Sure. So yeah, so RBL is one of the very, very resilient banks. It has a very strong tendency. It tends to move up a lot, and it just doesn't correct, and the consolidations are very, very narrow. So this tells you the confidence of the holder. So I mean, this is in a very, very strong trend. RBL looks fantastic, and it can see another easy 10 to 15% move on the upside. Federal Bank, I think has nicely completed its correction, the big correction that I'm talking about, and is now back into its uptrend. it can test its all-time high levels of 127 and possibly even breach it on the upside. So as I said, I continue to remain very, very bullish on the banking space.
All right, fairly bullish on the banking space. In fact, a fair number of the stocks that we've just discussed have seen further buying action just in the last few minutes or so, trading near our day's high, especially for the likes of Axis Bank. Shot up, in fact, as we've been speaking, 2.5% gains at the moment on Axis Bank. But let's move away then from the banking space, and we had Force Motors numbers that came out just a short while ago. Fourth quarter profit after tax has come in lower by about 35%. It's a near 40 crore number that we're looking at, 39.2 crores versus 60.6 crores earlier, and it's a sharp fall that's come in for Force Motors on the back of that. On the top line front, it's come in higher, but only by about 2% or so, 1.9% higher. 1,061 crores is what we've seen as far as the top line on Force Motors is concerned. So definitely seeing some pressure coming in for Force Motors. The stock seeing a sharp cut of about 2.5%. It's not just Force Motors. Pull up Ashok Leyland, reacting to the numbers that we saw coming in fact, seeing its biggest intraday fall that we've seen in about 3 months as far as Ashok Leyland is concerned. Brokerages have turned neutral or sell rating from whatever they had earlier on the back of what was a fairly muted set of fourth quarter numbers coming in. Amit, what would you be doing with these two names, if at all? Are you spotting any sort of opportunities on the charts of some of these auto names that have been heavily beaten down after their numbers?
Yeah, that was for me, right?
That's right, Amit, for you.
Yeah. So see, basically autos, pharmas, I think they are the laggards of this phase of the bull move. And yes, you can see 5-7%, even to some extent, even 10% moves coming in, up moves. But I don't think we are going to see any big money making opportunity here. This sector is going through its own set of problems, I think, and it's basically not in a bull move at this point of time. So I would avoid autos at this point of time, though they may not see very big and fresh downside from here, but at the same time I don't see even big upsides coming in. This sector is best left, see, even the way pharma is behaving, I think the money is moving out from some of these safe kind of sectors, pharma, etc., which were doing okay when the markets were not buoyant. But now I think the cyclical theme is coming back into the markets, and I don't think there's much of interest at this point of time as far as autos and pharma sector is concerned.
Okay, clear advice. Better to avoid the spaces of auto and pharma. We are, of course, seeing that kind of sectoral churn that's playing out as buying action comes into the market. In fact, on Ashok Leyland, the stock is clearly trading under pressure. We did see a very, very muted set of fourth quarter numbers come in. We had a chance to speak to the management of the company, Gopal Mahadevan, CFO at Ashok Leyland, who told us that he expects a better performance in the new financial year. Listen to those comments.
I don't have too much of concern on inventory. The inventory build-up, if it is happening, is conscious, at least at our company's level, because we want to ensure that we are able to service an upside in the demand if that happens. We finished the year as on 31st of March 2019 with 700 crores of net cash in the balance sheet. I believe that this should be a growth year sitting where we are in the month of May. We are looking at our operational efficiency and costs. So we are, again, looking at taking a deep dive in taking cost out of the company, which should also yield results on the bottom line.
All right, well, that's the management of Ashok Leyland for you. They're not too worried about inventory pile up, but it's quite the different story coming in for Maruti. This is a source-based story that we put out earlier in the day. Maruti has resorted to an unscheduled production cut on the back of surging inventories. In fact, they've had no production at their Gurugram and Manesar plants today. Maruti, in fact, has run out of parking space and is overstocked at the moment. Remember, we've been dealing with record high inventories for many of these automakers. Dealers have refused to pick up stock in the absence of demand at the retail level. Rising overheads and high inventories has seen many dealers also shutting shop, and that's definitely bad news as far as Maruti is concerned. Remember, Maruti produces around 6,000 to 7,000 units per day on an average. April sales for Maruti has dipped to a decade low, and they've cut production by around 10% already for the month of April, but it's at a standstill now is what we are learning, especially these two plants that I just mentioned. Maruti did see that dip coming in the morning. It's managed to recover from there. It's holding out just about above 7100 levels. It's a gain of about 0.2% playing out on Maruti. Would your overall view for auto, Amit, would that also hold for Maruti?
See, Maruti has now resistance somewhere around the 7350, 7400 mark. So it could get towards that zone. But I would more of look to, if it's a not too long-term holding, even if it's a probably 4-6 months kind of a holding, I'd look to exit as the stock moves up towards major resistance,
All right.
and shift that money to yeah.
All right, where would you shift that money to?
The cement pack is doing well, banking is doing well. This is where I think the money should be, and not the autos and the pharma. So I would get out of auto, get out of pharma, and move that money into banking and cement sector.
All right, so pharma, auto, definitely not spaces to be looking at the moment. Preferred areas like cement as well as banking, of course, that we have been discussing. In fact, it's 3 o'clock. Amit, let's get a few trading ideas from you then. Anything else that you're spotting at the moment? Just about half an hour to go before we close out the trading session.
Sure. So, deepaknitrate is something which I like, and I'm expecting the stock to move up sharply on the upside. So, I would buy deepaknitrate with a stop loss of 287 and target of between 345 to 350 can come quite quickly. And the another one is Axis Bank. Axis Bank I would buy with a target of 835, and I'll keep a stop loss of 794.
All right, so that's deepaknitrate as well as Axis Bank. Target of 835 on Axis Bank, and similarly on deepaknitrate about 345 to 350, the kind of targets that you can look for on that one. Both those stocks doing fairly well in today's trading session. In fact, fertilizers as a pack, Amit, doing fairly well. Pull up the likes of RCF, GS, FCA, both these counters are buzzing near about the highs of the day on those counters. 6% gains coming in on an RCF. Also seeing fairly good traction coming for GSFC, nearly 3% up. Are these charts looking good to you?
Yes, actually RCF, GSFC, even deepaknitrate, themes seems to be just starting and is in a very initial stage. Both RCF and GSFC have given a bullish breakout after a long consolidation and the long downward move. They are moving up with strong volumes, with positive bullish developments on the charts, positive patterns playing out. So I think yes, probably the sector is readying up for a decent up move. One can look to make quick 15-20% kind of an upside over the next maybe 10-15 sessions. Probably a sharp up move is likely on the upside.
Okay, a sharp up move on the cards as far as the entire fertilizer space is concerned. RCF, GSFC, deepaknitrate, one of Amit's picks as well. Keep these ones on your radar. Let's take a quick break. As we take that, of course, keep the focus on the market because we're trading near about the highs of the day. 11,930 is where we're trading as far as the Nifty goes. Bank Nifty now higher by about 440 points at the moment, and the broader end of the market also continuing to hold up. Small caps higher by about nearly 2%, and mid caps too seeing gains of about 1%. Stay tuned, we'll be right back. Welcome back to Closing Bets. Day's high playing out as far as the key indices go. 1.5% up on the Bank Nifty. We've added 470 points in today's trading session. Nifty also doing fairly well. Gains of about 0.8%. Trading near about that 11,940 mark on the Nifty, and the broader end of the market is also holding up quite smartly. Small caps in particular are seeing a fair bit of outperformance. Avinash Gorakhsakar joining in of Joinery Capital Services right here in the studio. Welcome, Avinash. A very good afternoon to you. And it looks like we're simply building on the gains that we saw post-election results day. Thursday, we ended in the red, but Friday onwards, it's been a bit of a one-way move coming in for the market. We're building steadily. There seems to be a lot of FPI and interest back, and that's what's really giving the market a fair amount of liquidity. The VIX is down another 2% today. We're near about 16 levels. That's about half of the kind of high that we saw just before the election outcome. Put this together for us. What is your anticipation? Life highs is just a matter of time as far as the levels go, but do you think that we'll sustain at these levels?
My guess is I think the markets have been clearly positively surprised by the election outcome, and I think a lot of uncertainty which actually had built before the elections has now got cleared. That is number one. And secondly, I think clearly with the new government now likely to be formed, Mr. Modi is going to be sworn in as the new Prime Minister on Thursday. I think most of the expectations of the markets would be on the oncoming budget in the month of July. So I think a lot of expectations have been moving around as to which sectors would benefit. And I think Nivrita, especially rural related themes, typically infrastructure related themes are going to definitely move up till the time we have the budget. Clearly this is where most of the money allocation is going to be done, and number one is from where the money would come in, and secondly Mr. Modi would try his best to ensure that the entire industry gets a significant boost to ensure growth. So I would believe that the markets may definitely cross the previous 52-week highs also. I think sustaining them would definitely depend on what comes out in the budget, and obviously you're going to see corporate numbers then finally deciding how these stock prices deliver. So I think net we are going to see a constant boost up from continuously news flows from the government, from the industry. So I think it's better to be a little patient. I think take your time, but overall I think the sentiment has improved significantly.
Absolutely, sentiment has improved very significantly, but of course the next big trigger is the budget. Expect the positive sentiment to remain, and of course once the budget is out, then we can decode whether or not we can sustain at these levels. It is all about earnings. We have the management of GAIL addressing us on the back of their numbers. They posted a bottom line that came in higher by about 10%. Stocks holding out fairly smartly too. Let's go across to that.
53,690 crores. PBT has seen a jump of 31%. For the FY 18-19, it is 9,085 crores as against 6,958 crore of the previous year. Profit after tax has seen a growth of 30%, which is 6,026 crore as against the previous of 4,618 crores. I am also happy to share with you that this is the highest ever turnover, PBT and PAT reported by GAIL in its history so far since its existence. As far as the Q4 versus Q4 of the corresponding year, the last financial year and this year, turnover has seen a growth of 22%, and the Q4 turnover was 18,707 crores. Profit before tax is 1,740 crores, which is a growth of almost 8% as against 1,604 crores. Profit after tax 1,122 crores, which is an increase of 10% over the corresponding quarter. The earning per share of GAIL has gone up to 27 rupees as against 20 rupees last year. The return on capital employed has seen further growth, which is 18% as against 15% of the last year. Dividend. GAIL has announced a dividend of 80% of the paid-up capital this year, and in absolute term, this is the highest ever dividend paid by the company, which is 1,808 rupees 8 crores for the financial year 18-19. And that is when GAIL has recorded the highest ever capex in its history of 8,300 crore we invested in the infrastructure. Bonus. We also declared a bonus of 1:1 on fully paid up bonus has been declared by the company. So these are some of the financial numbers on the annual results. On the physical side, we have seen the transportation was 107.4 million standard cubic meter as against 105 million standard cubic meter per day in the last year.
That's the management of GAIL for you, 2% up as we speak, and in fact building on those gains, it was a fairly decent set of numbers that we saw coming in from GAIL. The petrochem business though has disappointed. I think the bonus is definitely the good news. It's a 1:1 bonus that's been announced by the company, and a few records as far as their quarterly performance is concerned. It's not just GAIL that's doing well. Pull up IGL, Indraprastha Gas, that too has been holding up fairly well, trading with gains of about 5% or so as we speak. In fact, it's just off the highs of the day, but nonetheless, it's been doing well after the numbers. Brokerages have given a big thumbs up to this counter, even better than expected fourth quarter numbers coming in. In fact, we saw 28% rise coming in on the net profit front on the back of higher sales that they posted in the quarter gone by as well. In fact, we spoke to the management of the company who told us that they are aiming for a margin in the range of about 21 to 25% going ahead.
Anything between 5.5 to 6 is what is sustainable in our view. So we would look for that, on a long-term basis. Plus, we expect to grow, in double digits, more than 10% for next 2 years also. Going forward, once we streamline the, add more domestic and CNG stations, we hope to be in the 21 to 25% range next year. That we expect to grow by double digits and EBITDA margin to between 5.5 to 6 rupees a cubic meter.
Well, that's the management of IGL for you. In fact, it wasn't just IGL. Adani Gas also a fairly strong show coming in from them. Profit in the fourth quarter grew by about 60.5% on a sequential basis, and their one-time loss also narrowed quite significantly. We saw decent growth on the top line too, nearly 2% higher is where this came in. In fact, Avinash, coming on all these three stocks, it's not a bad show at all. As far as GAIL goes, we heard the management commentary there. Adani Gas, in fact, is doing fairly well. IGL on the move. Are you liking this space?
Yeah, I think within the natural gas space, both IGL and MGL look pretty solid. In fact, most of these companies, despite the fact that they are government utilities, the kind of return on equity and the kind of balance sheets they command, I think most of them are debt-free businesses. Plus, considering the kind of volume growth we have seen on both the CNG as well as on the PNG side for the industrial users, the management commentary has been pretty positive. In fact, IGL management has commented that despite the fact that headwinds have been quite challenging, they still would be aiming at a double-digit volume growth. I would believe that these are companies which could give a lot of stability to the portfolio, and I think in these markets, one could definitely look at a better risk reward from both IGL as well as MGL. Adani Gas is a new entrant, but despite the fact numbers have been pretty solid, and in fact this has been a very strong quarter from them. Hopefully, I think if they do maintain the traction and the run rate every quarter, then I think you're going to see a lot of action in this counter also.
In fact, Amit, I want to get a technical view on these charts from you also, but let's just quickly address Colgate numbers that are flashing at the bottom of your screen. Bottom line coming in at 198 crores, that is versus about 189 crores that we saw in the same quarter last year. Net sales, so the top line coming in at about 1,147 crores versus a comparable figure of 1,085 crores that we saw in the last quarter of the previous financial year as well. So coming in just slightly higher on both the top line and the bottom line front. The volume growth is of course the main figure that we need to keep an eye on. It's a 5% number coming in on the domestic volume growth front for Colgate. EBITDA has come in at about 303 crores. They've also announced a special interim dividend about 8 rupees per share. But it's the volume growth figure, Avinash, that's always crucial to watch, especially after what we've seen come out of the other players. What do you make of a 5% domestic volume growth number for Colgate? And bottom lines come in at about 198 crores versus 189.
No, I think these numbers are definitely in line with expectations, no negative surprises, and I think considering the fact that they have a complete dominance in the toothpaste market, I think one could have expected the volume growth could be a lot better, but I think considering the kind of domestic headwinds, 5% is definitely not bad, and I think hopefully coming quarter, what the management commentary is and how the volumes kick up, but I would believe that yes, numbers definitely are in line, and I think overall, the market looks at both the volume as well as the profitability, both at the operating and at the net level. So I think a decent set of numbers, mostly importantly would be the kind of new products and the kind of volume expansion which they expect in the coming quarters.
In fact, like you said, it's the toothpaste volume growth that's really driving the volume growth action. It's 5% toothpaste volume growth also that we've seen in the quarter gone by. The overall figure for the domestic market is also 5%. Margins have seen a contraction, 26.4% versus 27.7%. So a bit of pressure coming in on the margin front, and of course we are seeing a top line, bottom line numbers that are just about higher than what we saw in the previous year. 5% growth coming in on both the top line as far as well as the bottom line. The chart though, Amit, what do you make of this one? Because it's shooting up on the back of these numbers. A bit of a volatile move. The stock was already doing fairly well even before these numbers came out.
Colpal you're talking about, right?
That's right.
Colgate Palmolive.
That's right.
Right. Yeah. So see, the stock has been actually consistently trading below its 200 EMA, which is not a good sign. Though the trend is just okay, but my sense is the stock is losing the momentum it had, and I need to see evidence of it trading comfortably above 1200, 1220 zone for a considerable amount of time before I can say safely that yes, probably it is now in a safer zone. Broadly, the consumption theme is going through a bit of rough patch. A lot of stocks within the sector are showing loss of momentum. So I would actually avoid any longs at this point of time.
All right, so chart looking fairly weak, but what about these other consumption names, Amit? Of course, thematically, like I was discussing with Avinash, this might be one of the focus areas, at least rural consumption might be a focus area for the government. We'll of course have to await the budget for the fine print on that front, but some of these stocks are doing fairly well. Britannia is on the move, it's 1.5% up. Jubilant Foods seeing fairly good traction, 1.5% gains coming in there. HUL is doing fairly well. ITC is trading completely flat at the moment, but good traction coming in for the likes of HUL, Marico, Britannia, GCPL as well. Godrej Consumers holding out fairly smartly. Any of these catching your eye, Amit?
Yes, since the markets have moved up, even these stocks have moved up from their lower levels, but still the trend remains weak in the near term. At best, they are, after the correction, they are in a sideways fashion and still trading below short term key moving averages and below their even 200 EMA averages. So I would actually want to wait and not just rush in and buy into these stocks. I think these stocks are telling some signs of initial consolidation. It could turn out into a bit of a bigger correction, or at best it could just stay sideways and not have these bigger moves, the trending moves I am talking about. Of course, you can always have a short-term 5-7% kind of trading opportunities, but I don't see trending moves coming in for these stocks as of now.
In fact, Avinash, what would you be watching out for from this budget? Any hope of big reform being announced in the budget itself? Because we've had the interim budget come in. That's given us a sense of, the direction in which the government is thinking at this point. But since then, the macro data has definitely started indicating a much larger degree of a slowdown on the demand front. Consumption has become possibly one of the big talking points front and center. What would you be watching for? And on the back of that, how would you be playing the consumption theme?
My guess is I think the government could announce some sort of significant boost in terms of the overall spending in the economy, and I think clearly apart from the normal consumption kind of products, I think the industrial side, especially the capital expenditure side cycle is moving up. I think private capex cycle is now getting into a much more positive cycle, and most importantly the capex cycle would be aided by a lot of government funding. So I would believe that construction companies, EPC companies, capital goods companies, these could be definitely decent bets, and I think if the government announces several infrastructure projects and starts disbursing funds at a faster pace, you are going to see a lot of action. In fact, numbers which have come out for NCC clearly show that the order book has increased, profitability has jumped. So I think you're going to see a lot of action in most of these EPC as well as capital goods and construction companies, where a large part of the business actually comes from the government. So I would believe that these would be key trigger points, and one would hope that the government would make as much possible efforts to actually spend resources, depending on how they manage to raise the funds for this budget.
All right, one space that's seeing a lot of weakness, even as we've been talking about many of the gainers in the market at the moment. Pharma has been under pressure. Of course, Amit has a negative view on this space, or rather neutral view. Avoid this space, many other spaces where you can make money at this point in time. But pharma is coming under quite a bit of pressure. Let's talk about Divi's Lab, because this one is seeing a particularly large cut in trade as we speak. Fourth quarter numbers were fairly mixed. Revenue came in higher by about 15.4%. Margins did see a contraction. It's a 32.7% number that we saw on the margin front versus 35.5%. Net profit came in higher by about 10.7% at 289 crores. The stock is trading with cuts of around 9.5%, and that's really the story across the board, Avinash, for pharma at the moment. What would you be doing? Is this a space you're simply avoiding in a market like this?
I would believe that I think this space would definitely continue to be under pressure, especially companies which cater to the US markets, and especially companies where typically most of the customers come in from Europe and the US markets. So I think if you talk about a Sun Pharma or maybe a Lupin or typically even a Divi's Labs, I would believe that it would probably be after a couple of quarters that these stocks could get a further possibly some sort of attractive valuation. As of now, I don't see any major earnings drivers, and in the near term, at best these companies could be market performers. In the coming budget also, I don't expect any significant boost to the sector. Overall, I think companies which are focused more on the domestic markets could possibly be far more benefited than the ones concentrating on the overseas markets.
All right, so it's a clear, message there. Then focus on the domestic story rather than many of these companies that have exposure to the global market. A fair number of headwinds as well that might need to be priced in to the kind of performance that we're seeing for the pharma space. Kaveri Seeds numbers flashing at the bottom of our screens. The loss has narrowed as far as the fourth quarter is concerned. 11.4 crores versus a loss about 18.4 crores. Revenue from operations has come in higher, but only by about 7.5% on a year-on-year basis at about 44.7 crores as far as Kaveri Seeds, its top line is concerned. The stock though is seeing a positive reaction to the kind of numbers that we're seeing coming in there, and this too part of the kind of rural theme that we have been discussing. But Amit, one space that you had in fact spoken about was the cement pack, and let me just get a few names from you then. What's looking good to you from this space?
One of the mid-cap, I think it's a double advantage, I would say, for the stock. Anyway, the mid-cap theme seems to be catching up, and within that space, Heidelberg is something which I like, that's a good stock within the space, One can see decent gains, stock even heading up to 250 levels. On the upside. So Heidelberg within the mid-cap space in this cement pack is something which I like. From the little larger names, Ultratech has been one of the top picks. It's actually nearing towards the target. We have been bullish on this stock for some time now. It has a target of 5,000 in the near term. So that space also looks good. ACC also, is something one can watch out for. That probably is nearing, and attempting a breakout. I think it will test 1850 sort of levels probably in next 1 or 2 weeks, and once it starts moving beyond there, then again a big trend is unlikely to unfold.
In fact, seeing fairly strong traction for most of these names, the likes of Heidelberg, ACC, they've been holding up pretty well, and at the moment trading near about days high. A lot of pricing action also does play into this. We've seen consecutive months of moves on the pricing front, Avinash. But it does play into the larger theme that you were talking about the kind of infra spend that we might see the government actually undertake going forward. Which would be the names on your list here?
No, I think clearly, from a pan-India perspective, something like an ACC or a Ultratech could be better. But, the South-based companies, Nivrita, could definitely be in for a better kind of a risk-reward and for a further upgrade here. Typically, companies could be Ramco Cements and India Cements. India Cements actually reported a very strong set of numbers. And I think the southern market has seen a very less incremental amount of capacity additions, and where pricing power has also come back. So I would believe that Ramco and India Cements, typically could be stocks where one could possibly take a 6 to 12 month view. I would believe that from these levels a decent risk reward could get one could get.
All right, so those are a few names to keep on your radar from both the technical as well as fundamental perspective as far as the cement space goes. In fact, since we're talking about infra, I just wanted one view on one chart from you, Amit, and that's capacity infra. It's an order win that's really making the stock react today. They've won an order to the tune of about 170 crores or so from Market City. It is seeing fairly good traction as we speak. Along with that, we've seen decent moves come in, for select stocks. Ashoka Buildcon, we flagged this one off at the start of the show. It's simply building on the gains that we'd already seen come in earlier. It's up about 13.5-14% as we speak. Any of these that you're spotting any opportunities in?
You're speaking about the infra names, mid-cap infra names, right?
That's right.
Right. So, within this space, NCC, though, I mean, it's not based on the results which has recently come in, but I've been tracking this stock for a long time, and it's setting up very nicely, I would say. In the short term, I would expect the stock to test 140 But I think this is a much larger theme going ahead. So NCC is one of my top picks within the infra space.
Right, so NCC then is one of the top picks as far as the infra space is concerned. Definitely seeing strong traction for many of these infra names. A few other stocks though that are, seeing a fair amount of selling pressure at the moment. Page Industries, Amit, we've seen a very disappointing set of fourth quarter numbers. A lot of fresh shorts building up in this one. What would you be doing with Page Industries, if at all? Havells also was one of your calls earlier on. If you could revisit what you're watching for this one. And just to add to the list, names like Pidilite, what would you be doing with this one as well?
Yeah, so see, Page Industry is going through its own set of problems, and it is actually showing fatigue, and I think a lot of it's actually setting up like a theme, consumption related theme not doing well, probably shows that the markets is actually moving out money from a lot of very, very high earnings, highly priced, overvalued stocks, and moving that money into the cyclicals. Page Industry, if I specifically talk, I do see the stock, testing levels of about 17,000 to 17,400 on the downside. That is where I would watch out what happens. But I think there's still some pain going ahead, and even if the pain subsides, I don't see any V-shaped recovery happening there. At best, it would just languish there.
All right, so that's a Page Industries for you. Avinash, we didn't get a chance to speak about financials, but that's really where the action is concentrated at the moment. The Bank Nifty is higher by about 400 points as we speak. It's the private banks that are participating. Bank of Baroda, SBI, PSU banks are participating. HDFC Bank is up by about 1.5%. Even the smaller names, RBL Bank is the top gainer with 5% gains. Yes Bank is seeming to recover from the most recent low that it's made. It's up 4% as we speak. Where would you be putting your money in the financial space?
No, I think within the financials, the private sector banks and the frontline PSU banks would figure out. I think clearly, from the corporate banks, ICICI Bank looks quite attractive. Axis is also quite decent. From the PSU banks, we still continue to be positive on SBI as well as Bank of Baroda. Our sense is that most of the asset quality issues have actually been now, completed, and I think you could possibly see better asset quality numbers in the coming quarters. Overall, I think it would still be prudent to, put more money on the private bank side, considering the fact that asset quality stress, for the other PSU banks could be very high. So I think private sector banks could definitely gain from this development, and I think at the end of the day, corporate banks as well as a retail mix of banks, especially which is Axis and ICICI, could possibly see a stronger kind of traction, in the near term.
In fact, fresh life highs is what we've seen coming in just a short while ago on Axis as well as ICICI Bank. We're trading, in fact, near those life high levels on both these counters. It's been a one-way move really for these banks, the private banks at least, the corporate-facing ones, ever since those cuts that came in late last year as well. Avinash, just a quick, last comment from you then before we get into closing. How would you be playing the oil theme? Because that's one of the key positives as far as this market is concerned. It's boosting sentiment. It's brought our bond yields down. It's bringing a lot of FPI interest back in our markets, our debt markets also. Would you be going for the OMCs at this point in time? Names like IOC that are doing exceptionally well at the moment now that elections are behind us? Or is there some other way that you're playing the theme?
No, I think clearly oil prices have corrected sharply, and I think the best way to play them is obviously to bet on the oil marketing companies. And apart from IOC, I think even a HPCL and a BPCL could figure out in this list, considering the fact that if oil prices do continue to remain here or they correct further, then I think you're going to see the GRMs improving in the coming quarters. And obviously with the elections out of the way, any price increase or any cost increase could easily be passed on. So I think clearly you could see a continuation of a strong earnings recovery here. Overall, I think these are typical large momentum bets depending on how the crude price pattern follows. But overall, I think IOC and HPCL within the OMC pack definitely look good.
All right, so IOC and HPCL, a couple of names to keep on your radar. Avinash, thanks as always for joining and sharing your perspective of the markets. Definitely seeing a strong day as far as the market is concerned. We've kicked off the week on a strong note. We're closing out, in fact, near about the highs of the day, so above 11,920 on the Nifty. The Bank Nifty too, we're holding out with a good gain of about 400 points. Remember, we'll have to see how things close out once the market settles, but at the moment it does look set to be within touching distance of those life highs that we made. The VIX has cooled by nearly 2%, so we're closing out at levels of 16 as far as the India Volatility Index is concerned. So what did well then? Sectorally, in fact, for all sectors with the exception of media, Z Entertainment being the big drag on that front, and along with that we did see pressure coming in for the entire pharma pack in today's trading session. But on the flip side, metals were clearly leading the way. Tata Steel top gainer on the Nifty, gains of nearly 6% is what we're closing out with, and we did see good traction coming in across the board as far as metals go. NMDC, JSPL, Steel Authority of India, Hindustan Copper, Nalco, Hindalco, Vedanta, Hindustan Zinc, JSW Steel, all these counters closing out in the positive. Also seeing a good day of trade come in for a whole host of these oil and gas stocks. So IOC, HPCL, BPCL all getting that bump up from the kind of cool off that we've seen for crude prices. And on the gas front, names like Indraprastha Gas, GAIL India, Adani Gas all seeing very positive reactions come in to their quarterly numbers as well. Yes Bank had a strong day of trade, closing out higher by about nearly 4%. In fact, the bank Nifty stocks across the board did outperform. In fact, the only counter that closed under pressure was IndusInd Bank, 2% cuts coming in for that one. But on the flip side, RBL Bank, top bank Nifty gain of 4.5% gains is what we've closed out with. Axis Bank and ICICI Bank making fresh lifetime highs in today's trading day, 2.5% gains on Axis, and we finally closed out at about 8.14 on that counter. Bank of Baroda reacting positively to its numbers, 2.5% gains is what we've closed out with, and State Bank of India continuing to build on the gains that we've seen recently, nearly 1.5% higher is where we've closed out on that one. HDFC Bank also participating in today's trading day. But apart from the banking names, we saw good traction come in for names like NTPC. L&T was on the move, 3% up is where we've ended on that one. M&M did fairly well, even though many of the auto counters did come under pressure. Maruti and Mahindra managed to hold out in today's trading day. On the flip side, though, we did see some pressure coming in for names like Ashok Leyland reacting negatively to its numbers. Tata Motors also closing lower by about 0.7%. In fact, even Maruti gave up the gains by the time we headed towards the close of trade. The top Nifty loser, though, Z Entertainment ahead of numbers, 4.5% cuts is what we've ended with. Reliance also not participating in today's trading day, 1.5% lower is where we've ended on that one. All those IT stocks also giving up some traction in today's trading day. Tech Mahindra, Wipro closing lower. Indiabulls Housing lost out. ONGC closed out lower. Also seeing some pressure come in for Bajaj Auto and Hero MotoCorp in today's trading day. Broader end of the markets, though, did fairly well. So we closed out higher by about 1% on the mid-cap space and nearly 2% as far as small caps are concerned. Select areas did fairly well. Cement stocks were on the move. Ramco, Heidelberg, India Cement all closing out higher. Avanti Feeds did fairly well in trade. In fact, we saw good traction coming in for Apex Frozen Foods as well as Avanti Feeds. Ashoka Buildcon seeing a very strong day of trade, 14% gains is what we've ended with. Narayan Rudradle also doing fairly well after the company reported healthy earnings growth for the fourth quarter. Gateway Distriparks did well. Bombay Dyeing participated. Kaplan Point did fairly well. Shankara Building Products also participating. And of course, all those metal names from the mid-cap space also seeing fairly strong traction. A whole host of breaking stocks that we did highlight for you, names like Birla Corp that were very much on the move. Fertilizer stocks were buzzing across the board. deepaknitrate, RCF, GSFC all seeing fairly strong traction in today's trading day as well. So overall, a strong day of trade coming in, and in fact, Amit, just let me get a few closing comments from you. It has been a very, very volatile set of weeks ahead of us, in fact behind us. As we move forward from here, we do have a few big events. We've been talking about the budget. That will definitely be a factor the market is looking at. So in terms of the key levels that we need to keep in mind for the market, what would you be tracking on the Nifty and the Bank Nifty, and any stocks that you want to highlight that might be in focus for tomorrow's trading day?
Sure. See, on the day of announcement of or the, I would say, the counting of the votes, in spite of markets seeing a big win for the BJP, we did see sharp profit booking coming in, and we made a high of 12,041. Now if in a day or two, if we do not attempt and cross these levels, my sense is we will go through a phase of consolidation. See, the profit booking that has happened, that was definitely some strong hands booking profit in spite of biggest mandate for the BJP. So of course it was a strong, those were strong hands, and I won't be surprised if these levels are maybe not crossed for next few sessions. That though the undertone continues to remain positive, but my sense is if 12,040, 12,050 is not taken on the upside, then we'll see a phase of consolidation happening for the markets.
All right.
And
right. Go on for the Bank Nifty.
One stock. Yeah. So yeah, similarly for the Bank Nifty too, though Bank Nifty is more positive, and the next zone on the upside is towards 32,300 to 32,500. But I would watch out for, because as I said, we could be settling into a phase where the index does not do much beyond maybe 12,040, if at all, if it does not take that level out. And upside anyway, I do see a bit of cap towards 12,200. So there may not be much of headroom as far as index is concerned. So the more likely scenario is a consolidation kind of a phase where mid and small caps overall continue to do quite well. What are the names that not from a trading perspective, but I think I do see a decent amount of money making opportunity coming in here. So Just Dial is something, the stock actually has completed its 2 years of down cycle and 2 years of sideways cycle, and has started moving up above its range. So 650 to 670 is a good support zone for Just Dial. Yes, it's in high beta stock. But I do see the stock moving towards 1,000 levels on the upside. So it's a good investment bet. I see that kind of levels coming in fairly quickly, and that possibly can come in next 4 to 6 months. So I do see a good money making opportunity in Just Dial.
All right, so that's a pick coming in from Amit. Just Dial, a very, very volatile stock, but definitely looking strong as far as the charts are concerned. Amit, thanks very much for joining in. Appreciate you sharing your views on the market. In fact, we're leaving the market higher by about, nearly 0.7%.